Hi, my name is Roger Schlitter. This video is actually on SBA's credit bar and really how low it is. A lot of people don't understand that. I see a lot of these videos on YouTube, that say, hey, credit doesn't matter. We don't even run your credit, and you can borrow all this money. I hate to say they're kind of fibbing you, but they are kind of fibbing you. I mean, they're not going to let you borrow a large amount of money without running credit because most people can't lose that large amount of money. As long as they're given pretty small amounts, then it kind of can be done. I'd really be wary of lenders that say credit is not an issue because credit is always an issue. The only way credit would not be an issue is if the lender is getting at least 5% or more up front. What they do is they have this in the small print, and then when they do the loan, they take it out of the loan proceeds before they give them to you. And then usually they'll have a really high interest rate. I mean, usually it's going to be 20 to 30%, where they're making back their money pretty quick. And if there's any collateral involved, I mean, this is a no-brainer, because they could always take the collateral for the shortfall. So anyway, a lot of times if they take collateral, if they take your car, if they take your house, the building you just purchased, they can even sue you for future earnings. And they could, any future job you get. So let's say this business doesn't work out, you give them back whatever, and then they go ahead and sue you in the future for any future earnings that you get trying to take it out of your wages. Now, I will admit SBA loans have higher fees than conventional loans. And they have higher fees and they have higher interest rates than conventional loans. But they're legit. I mean, they're really trying to watch your back. Many of their loan requirements are there to protect the borrower from unscrupulous lenders. And those can be banks too. I mean, there's a lot of times banks want to take advantage of you. So you do have to be careful. SBA does a credit score on a lot of the loans, but this score isn't really like a bank credit score, and it's a lot more forgiving. The banks or the borrower's personal credit score can be fairly low and still make the loan, still make an SBA loan. Whereas a bank loan, you got to have a pretty respectable credit. So anyway, I would really try to get an SBA loan before going to, what I call lenders of last resort, either on the internet or the people that say, hey, your credit doesn't matter here, we'll get you a loan no matter what. Because the terms on that loan could be so bad that you may go out of business before you even pay off the loan. And it's really because the fees are too high and the interest rate's too high. Now, I've gotten loans for people that have had a bankruptcy. I've gotten 7A loans for borrowers who have had, a bankruptcy several years ago. But usually it's several years ago, and during that period they've straightened up their credit, and they've really been paying on time since that time. I do know, I've run into, anybody in lending has ran into people that really are kind of your lenders of last resort. Because they tell us, they say, hey, we'll give you a pretty generous referral fee if you refer people to us. And that's how they can afford to give you that pretty good referral fee, because they're making some fees off this like you wouldn't believe. A lot of them have about, I know the one guy I know has like 50 lenders that he knows. And he's basically going to send this out to all his lenders and say, hey, this is the deal. Does anybody want it? And basically they'll come back and say if they do, but it won't be competition for the best rates. They'll all be terrible rates. They'll all be super high fees. And the fees might be different fees. I mean, you're saying, oh, okay, a 5% fee, whatever, they take it out, when they give the loan. Well, what if it's like a 5% fee, and then you also have a doc fee, and then you have another packaging fee, and then you have another fee. Pretty soon you're paying a lot of money for these loans. So anyway, I've thought about it. I think anybody's thought about it that does lending. I mean, they're going to give me a huge referral fee, but then, when you think about your borrower, the guy who's depending on you, he's kind of like under the protection of you. He's a client. Those are erased, absolutely, very quickly. Because the only way I would refer somebody to somebody like that was if they couldn't get the loan, they really needed the loan, and they had a purpose that they could make money from the get-go and they could pay this off, and they couldn't get hurt. And even then, I don't think I would. No, I just can't. You can't do that to clients of yours. You can't do it to people and really anybody you're helping is a client. And banks usually look upon that too. When they're helping you get a loan, you're a client of theirs. They're trying to help you. They're not wanting to put you out of business. So anyway, SBA probably has a minimum credit score. I really don't know what it is because they run their own internal one. Banks absolutely have a minimum credit score, which is usually much higher than SBA. Banks use SBA when there's a problem, and I've said this on many videos. Banks use SBA when there's a problem, problem with a loan like credit. Credit's not high enough, so they're going to use it for that. And most banks will try to get the loan approved. If they make SBA loans, they're gonna fight for you. They're gonna want to make sure that loan is made. So anyway, I would exhaust the SBA lenders before I'd really go to what I call the loan sharks on the internet, or the guy who says, I can get you that loan, no matter what, because like I said, I know one of those guys. And if you cannot get your loan approved, they usually say, if you can't get your loan approved, send it to me and I'll get it approved no matter what. But, you really don't want to do that. I would really try to stick with reputable lenders if you can. You're going to be a lot better over the long term. So anyway, like I said, when you get these alternative loans, either off the internet or the guy that says, I'll get you the money no matter what, usually they're very expensive loans, with high fees and the highest interest rates, so high that they can pay that big bonus to me, to give them referrals. But I'm not going to take it, believe me. No, I can't in good conscience. I couldn't do it. But anyway, most of these businesses, they can get you a loan no matter what. Usually what they want is they want good, honest people that are in business but having a problem, having some hard times. And they kind of prey on those people because they know those people will try like heck to pay them back. They'll give them their every last dime to pay them back. They're not going to borrow the money and run out on them. They're going to borrow the money and pay it back. And no matter how hard it is, no matter, they got to work 3 jobs, they're going to pay it back. And those are the people they try to get. They want those type of people because they just want to make the money. That's all that's in it, is to make the money. So anyway, I would try to stick with SBA lenders, stick with banks that do SBA loans, and you might be surprised that lender, that banker may be able to get you that loan. That even though it is an SBA loan, he can still get you that loan, which will be a lot better than going to the alternative lenders. So anyway, that's the end of this video. If you like this type of content, business content, lending content, please subscribe and hit the bell notification for future videos that I do. Anyway, if you take anything away from here, out of this that you get a benefit from, if you could hit the like button, I'd appreciate it. This is Roger Schlueter, and I will see you in the next video.